Hello everyone, myself Pavitra, Assistant Professor, Department of Commerce from St.Josephs College of Arts and Science for Women, Hosur. Today topic is Introduction of Internal Control. Agenda: Introduction of internal control, meaning of internal control, objectives of internal control, internal check, meaning of internal check, objectives of internal check. Introduction of internal control. Internal control is a crucial aspect of an organization's governance system and ability to manage risk, and is fundamental to supporting the achievement of an organization objectives and creating, enhancing and protecting the stakeholder value. High profile organizational failures typically lead to the imposition of additional rules and requirements, as well as to subsequent time consuming and costly compliance efforts. Effective internal control also creates a competitive advantage, as an organization with effective controls can take on additional risk. Despite the existence of sound internal control guidelines, it is often the application of such guidelines that fails or could be further improved in many organizations. Meaning of internal control. Internal control means not only internal check and internal audit, but the whole system of controls, financial and otherwise, established by the management in order to carry on the business of the company in an orderly manner, to safeguard its asset and to secure as far as prescribed the accuracy and reliability of its records. Objectives of internal control. First one, to evaluate the efficiency of performance in the various activities of the business. Second, to ensure orderly, efficient and economic conduct of the business. Third one, to see that access to and use of assets are made only with proper authorization. Fourth one, to safeguard the asset of the organization by preventing frauds, wastes and inefficiency. Fifth one, to ensure that there is periodical verification and comparison of assets in existence with those of accounting records, and appropriate action is taken when there is any difference between the two. Sixth one, to ensure that transactions are recorded in the proper books of accounts regularly, correctly and systematically according to policies and procedures, and the accounts are accurate and reliable. Next, internal check. Internal check is the arrangement of the accounting duties under which the work of one person comes under the scrutiny of another person, so that it is not possible to commit fraud without collusion between two or more persons. So according to L.R. Dixie, internal check is an arrangement of the accounting routine that errors and frauds are automatically prevented or discovered by the very operation of the bookkeeping itself. Objectives of internal check: to prevent the commission of any error or fraud by a clerk, to prevent the misappropriation of cash or goods by any clerk. Third point, to throw responsibility on a particular clerk when the fraud or mistake is detected. Fourth one, to detect a fraud or an error quickly and easily. Fifth point, to have an accurate record of all business transactions. Next, importance of internal check. Assigning responsibility. To allocate the duties and responsibilities of every employee in such a manner that they may be identified and held responsible for a particular error or fraud. Second one, minimizing error or fraud. To minimize the possibility of any error or fraud done by any staff member. Third, detecting errors or frauds. To detect errors or frauds easily due to independent checking of work done by one employee by another employee. Fourth one, reducing clerical mistakes. To minimize the possibility of omission of any transaction from being recorded in the books of accounts. Fifth point, enhancing work efficiency. To enhance the efficiency of the staff, as the management duties is based on the principle of division of labor. Next, advantages of internal check. First one, proper allocation of work. It facilitates a proper and rational distribution of work among the members of the staff based on the principles of division of labor. Second one, early detection and minimization of errors and frauds. In an internal check system, no individual is allowed to handle a job completely from beginning to the end. The work of each individual is automatically checked by the other arrangements, helps in the early detection of errors and frauds and the possibility of their omission are minimized. Third point, increased efficiency. In an internal check system, there is a proper and rational distribution of work among the employees according to their qualification, experience, and specialization. It leads to increased efficiency of work and overall economy. Fourth point, quick preparation of final accounts. In an internal check system, all accounts are checked side by side. No errors remain in bookkeeping. Hence, final accounts can be prepared easily and without any loss of time. Fifth point, convenience to the auditor. In an organization where internal check system is prevalent, routine checking is not required. Possibilities of errors and frauds are minimum. The statutory auditor can easily avoid detailed checking and can adopt only a test checking. His work thus becomes very easy. Next, limitations of internal check. First one, expensive for small business. So internal check system requires a large number of employees